It's Midcap Radar time. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Patakia. With me is Mangalam Malu. And contrary to what you've been seeing on the screen for the last 10 days, you can be heaving a sigh of relief, at least for now, because the screen's color is green.
The screen's color is green. The question is, to what extent can the screen hold that green? Because, you know, while the bulls have seen some relief, the bears are seeing this as an opportunity. Could this be one of those levels from which we can short? That tug of war continues. It will be very interesting to see where we go from here. But now it is looking like a very bright green screen. First up, all the top stories that we're tracking this afternoon. The stock market sees a sigh of relief on possible review of tariffs on Canada and Mexico. Midcaps lead the charge. Utilities and realty, along with metals, outperform.
Coforge stitches up a hefty $1.5 billion 13-year contract with American travel major Sabre, making its presence felt in the big deals arena. The stock gets a leg up.
Granules India corrects on the back of a US FDA warning letter to its Gagillapur facility, says data integrity and quality contamination issues found at the unit.
BSE shares dropped as much as 9% before recovering slightly from the lows, and that is after NSE shifted the weekly expiry date from Thursday to Monday. Analysts say that there is a possibility of some volumes moving to NSE from BSE.
Adani Wilmar climbs 6% after the company has announced the acquisition of Tops ketchup and sauces maker GD Foods. They're set to acquire 80% stake in the company at an enterprise value of 603 crores. Holding well for the markets right now, 250 points higher for the Nifty. The Midcap index up 1,000 points. So Midcaps is where the action is, but none of the big caps are, sitting idle. You have some of these big FMCG movers. Nestle, for instance, has moved to the high point of trade. Britannia has moved to the high point of trade. And we are seeing Ultratech Cement as well, the big boy, moving well and currently moved to the high point of trade itself. But if you look at the non-index big caps, Lupin has surged, JSW Energy is doing well, and Indian Hotels too. A stock which had corrected about 15-20% from the highs is now back in the fray, up around 5.5% on Indian Hotels. A lot of stocks are actually moving around. So let's get to our mid-cap movers segment, where nearly 2,300 stocks which are in the green will be spoken about by Vamakshi. Not all 2,300, but the important ones. Vamakshi.
Well, absolutely, Mangalam. Not all of them, but at least we can highlight a few for our viewers. Let's first look at the stocks that are gaining in trade today. IIFL Finance is one such name. It is the biggest intraday advance since September. Akram's Drug was a top volume buzzer yesterday. The stock continues to gain today, up nearly 9%. Let's also look at Reddington. That stock is flying away, up nearly 7%. And Adani Wilmar, on the back of that acquisition of GD Foods, is up nearly 7%. Apart from that, a lot of IT stocks are gaining momentum in trade today. Coforge, on the back of that contract win, is up nearly 8%. KPIT Tech is another counter that is up nearly 6%. Persistent Systems and Cyient also feature in this list. Telecom stocks are another pack that are abuzz in trade today. Tata Communications up nearly 5%. Vodafone Idea trading close to the day's highest point, up nearly 4% today. HFCL and Indus Towers as well flying away in trade today. Apart from that, on the flip side, when we look at the stocks that are declining in trade today, Anand Rathi, the stock, there was a split announced, and that is why the stock is down. BSE Limited is another counter that is down and out in trade. Go Digit as well as Sun Pharma Advanced Research also down and out. Lastly, let's also focus in on some counters that are moving on the back of very strong volumes. This list features Coromandel International, the biggest intraday advance since May 2022. Avanti Feeds is another counter that is up nearly 5%. Kescorp and Elcon Engineering are some other counters that are flying away in trade today.
Vamakshi, thanks a lot for that. And the good part of having 2,300 stocks is you can highlight as many as you want, right? IIFL Finance is up 9.5%. MGL is doing well for itself today, sprung up 6% higher there. And as is Sona BLW, that too trading with gains of around 6%. Let's welcome in Jay Thakkar from ICICI Securities for a quick chart check. Jay, good afternoon. Thank you for joining in. How much do you read into this bounce? Do you use this bounce to reduce your longs, exit your positions, or do you see the start of a sustained recovery from here? That, and couple that up with your stock recommendations as well.
So, very good afternoon to you, Hormas and Mangalam. Well, I would say, Hormas, see, this bounce which we are getting right now is from quite an oversold territory. You all know that. I mean, 21,800 to 22,000 levels are really extremely crucial support levels from the point of view of election lows. I mean, on the closing basis, which we have seen, we have already seen index net long positions by the FII at 15-16% since past 2 months now. So that's been quite oversold. And also, if you look at the PCR, which had actually fallen quite a lot, and we hardly had any put base at the start of this weekly series, but now we have substantial put base when the PCR has gone above 1 now for almost all of the major indices. I mean, whether it is Midcap Nifty, Fin Nifty, Bank Nifty or the Nifty, so all of those are well above 1 now. And I think that now till 22,000, 21,800 levels are held, almost the probability of the index, doing a meaningful bounce back, at least until say 22,800 would be the immediate target first now, and thereafter maybe 23,200. So net 800 to 1,200 points kind of a bounce back from the recent lows which we have seen at approximately 22,000. So that sustainable bounce back is on cards. I think it's quite oversold, and mid and small cap indices have also reversed from quite an oversold territory now. So there also the bounce back can't be ruled out. And after 10 days of negative flows, which has not happened in the past, we are getting that positive flows, Hormaz. So I think this momentum can continue because we have seen this bounce back in many of the sectors and stocks. As far as stock-specific ideas are concerned, I have two buy recommendations. One is on Motherson Sumi. The stock is trading around the levels of 123, 123.30. One can place a stop loss below the levels of 116. And positionally, one can target 132 to 136. These are the two targets on the upside. The stock has provided a breakout from a tweezer bottom pattern, and it's also seeing a good short covering now. So it's quite oversold, a tweezer bottom pattern, breakout and short covering. And second buy recommendation is on Hind Copper. It's trading at around the levels of 213.60. It too is witnessing a good short covering, and it has provided a good breakout from a falling wedge pattern with a bullish momentum crossover. And if you're seeing that metal index is already doing good, in fact, it's trading with a positive bias as that to Nifty.
Jay, thank you so much for joining in and giving us your call on the market and individual stocks. But it's not only the market which is near day's high, it's the rupee. And that's the big story of this afternoon. The Indian rupee has actually gained nearly 20 paise, jumped to around 87 rupees to 6 paise per dollar. And this is largely due to the dollar weakening that we saw overnight, the dollar index weakening. But the rupee itself has gained less than other currency. The key question, are the FPIs buying? Lata joins in with more. Lata.
Well, it is a dollar dipping story. In fact, the dollar is dipped more versus the euro. The trade that we are witnessing over the last, say, maybe couple of days, 48 hours, is dollars moving or money power moving from US, both currency and stocks, to Europe. Actually, a very big, valuation catch-up is happening there. Part of the catalyst could be that Europe is now intending to spend a lot on military because of America opting out of the Ukraine war. And also the US exceptionalism appears to have dulled a bit, especially because of the tariff increases on Mexico and Canada. Somehow the market was under the assumption that it is going to be postponed. And the fact that it's come has created a lot of disruption. It's not the same as tariffs on China. Mexico and Canada are inextricably linked with US. So immediately the inflation will hit, and maybe at a later time the exceptionalism in terms of lower taxes will impact the earnings of US companies. For at the moment, US exceptionalism story has is impacted, tarnished, and therefore you're seeing the dollar weaken. I think it's a 2025 low. We have not seen dollar index below 106 for all of, I think it was last in November that it went below 106. That is, after the Trump victory, this is the first time the dollar index has weakened so much. So that explains the rupee strength. Also, the entire market is sitting long dollars, and therefore a lot of corporate treasuries which take these positions are apparently coming and selling dollar, booking profit as it were. Also, the Reserve Bank was showing a lot of resolve at 87.40, not letting the rupee cheapen beyond that, and that is leading to all this selling of dollars. Exporters usually bring in a lot of dollars by March end. Their profit booking also happens, and for them this is a very important signal that they're not going to get more than 87.40, so sell now. That seems to be one of the trends. Now, one question which all of us will want to know, are the FPI selling dollars? Are they buying stocks and therefore selling their dollars to purchase rupees and buy stocks? I have not heard evidence of that at all. Custodial banks didn't tell me that, neither did the other banks. So all I can say is I didn't hear. Let's wait for the FPI number. But this evidence of dollar selling is coming from corporates. It has not come from FPIs just yet. And just one more by way of evidence, the rupee has not strengthened as much as the other Asian currencies. But this is a global trade. It is not an India-specific trade, this dollar weakening.
Take that point, Lata, and the second last point, no evidence of FPIs yet buying in the markets has been there. But then again, there's no evidence. We'll watch out for these numbers as we progress. Today could well be just a short covering pop or not. Let's see whether that happens or not. This evening is all you have to wait for. Take a short break, come back. On the other side, we will talk about Volvo, which launched the facelift version of its premium SUV. We'll get chatting with the company's managing director after this short break. Swedish luxury automaker Volvo Cars has launched its flagship SUV in India, the 2025 XC90. Car available at an introductory ex-showroom price of 1.03 crore, which is just 2 lakh rupees higher than the older one. To discuss more on this and the company's growth outlook, the impact of Trump's tariffs on the auto sector, my colleague Parikshit Luthra spoke with Jyoti Malhotra, who is the MD of Volvo Cars India. Listen into that conversation.
There's a lot of geopolitical uncertainties, and India is not really isolated. And beyond that, I think let's look at from two aspects. I won't want to put into 1 year perspective, but one thing is sure: India is on a growth trajectory. Indian economy is going to, I think, get better and better. No doubt about that. In medium to long term, number one, the demographic dividend is very much here. Because I think from 2018 onwards, we have a median age which will continue. And we have seen in many other countries and economies when you are in that midst, together with economic growth, I think this will mean very good for our industry. All the lead indicators are very, very positive. Because when we speak to anyone, everybody says, okay, we have been listening about this India story for very long. What has changed now? I think what changes now is these two things coming together. The scale of economy is now at a very good place. And then growth coming on that is going to really ensure that the per capita incomes are going to go up. The division of household income, it was quite skewed. At the top, there was very, very few, you can hand count them actually. But that's started to already expand. And you will see in next 10 years, this is going to be, I think, much more balanced. Obviously, it will still continue to be heavier at the base, but it will become much more substantial among the top also. And you can already see the consumption pattern because of these things, because of the demographic dividend leading to more young aspirational buyers in the market. They are wanting to lap up whatever is available, whether it is about watches, whether it is about electronics. So you can see people are now looking for the best they can afford.
The impact of tariffs. Donald Trump, the United States has imposed tariffs on Canada and Mexico, on China also. China has also announced retaliatory tariffs. What impact will this have on the Indian auto industry?
I think it's a very difficult question, I'll be very honest, and things are still developing, right? And I believe that recent visit of our Prime Minister to US in some ways has really helped to calm down the nerves, and which at least I would say has, in my view, it's come to a neutral situation right now, at least for the short term. And we hope that things will settle down, and I think we have a good equation between the two leaders, which will ensure that we are moving in the right direction and at least remain, I would say, isolated from what is going around. But at certain level, we cannot be isolated. But let's see how it develops from here on.
Okay. Now, India and EU are negotiating a free trade agreement. They hope to conclude it by the end of this year. That was put out in the joint statement by both India and EU last week. What would be your expectation and hope that when it comes to tariffs on the auto industry, what level should it be brought to that may actually help your companies increase their footprint in India?
See, I think we should understand one thing, that tariffs are actually two-way, what we are seeing already, right? So if we have to give in, then we have to give up also, right? It applies on both sides. So it's a very loaded situation, because on one side, if you see what has happened now when it comes to auto industry, our auto industry has become massive in terms of number of cars that we sell here. And if you really see, we have been able to do this despite all the tariffs and everything available by focusing more and more on Make in India. And I think that's the right direction for the country. So we should promote that we are able to sell more cars which are produced in India or which are value added in India or assembled in India. I think that's the focus should be. And we should, I think we can't have a situation where obviously some of the import duties are very high. And we should balance them out in such a way that we get benefit of offering our domestic market to others, but also getting access to our car being produced in India to other markets. So I think we have to strike the right balance. It's very difficult to put a number here, but we have to be competitive.
What do you feel about the prospect of Tesla entering the country? How will it impact the auto industry?
See, I think on one side, there are two things. Personally, I would say, I think there have been a lot of this speculation about Tesla coming for quite some time. So let's see when they come and how, in what shape they come. And in my view, I think more companies come to India, better it is. In the sense, you look at, let's say, recent Auto Expo, almost everyone announced an EV, which is good for the industry because now there are choices. Customer gets a clear signal that every company is now thinking of EVs. Tesla coming to India also gives a very good sign that, okay, India is a good country for EVs. And I think it will give more choice to customer. It will only create to the buzz. More people start considering EVs. I think it becomes like a daily discussion on which EV to buy and whether to buy EV or not. I think the discourse has to change from whether should I buy EV to which EV should I buy. Okay. It will help that.
Welcome back. 2,215 stocks on the NSE are currently trading with gains. One of them is Hitachi Energy, and Vamakshi is here to tell us exactly why. Vamakshi.
Well, Hormaz, Hitachi Energy is abuzz on the back of a brokerage report that came in from Goldman Sachs. They have a buy rating and they've upgraded their target price from 8,250 to 13,350 rupees per share. So massive upgrade coming in here from Goldman Sachs. Now the rationale behind this is, number one, the strong ordering pipeline that they see ahead for the company. They have a very strong HVDC pipeline. Specifically, 3 planned HVDC lines will be ordered out over the next 1 to 2 years, and these are large projects for such companies, which is why this bodes well for Hitachi Energy. And here itself, Hitachi Energy has a nearly 50% share in the domestic market. In fact, overall, they also expect grid capex of $100 billion by FY32, $500 billion by FY50, and they believe that Hitachi Energy could be a significant beneficiary for the same. In addition to that, non-grid related transmission equipment capex of also $14 billion by FY32 and $51 billion by FY50 is what they see, and Hitachi Energy could benefit on the back of this as well. Given the kind of demand that they're forecasting, they are also undertaking capacity expansion plans to meet both the domestic as well as the export demand. Given these two factors, they've gone ahead and revised their estimates for order inflow. They're expecting an order inflow of almost 18,454 crores. This is much higher than what they had expected earlier for FY25. For FY26 as well, they've gone ahead and upgraded their estimates for the order inflow. As far as EBITDA margin is concerned, they're expecting the company to end in the double digits. 10.5% is what they're expecting now, and in FY26 this number could rise to 13.4%, and this is again much higher than what they had earlier estimated. They further add that they see more room for margin to expand alongside rising orders. Given the kind of demand that they're seeing, they've also gone ahead and raised their FY25 to 27 EBITDA estimates by 10 to 50%, and given those rationales, the brokerage has gone ahead and upgraded its target price to 13,350, massive upgrade, and the stock is reacting to the same.
Indeed, one of the top gainers on the Nifty 500 and also trading gains around 7% now is Hitachi Energy, still 20% down from its peak. Vamakshi, thank you for that. But with that, we call time on this edition of Midcap Radar from Banglam, me and the team that put this show together. Thank you so much for watching. Your stocks for the next 30 minutes.